Ladies and gentlemen, good day and welcome to the Sirca Paints Q2FY25 earnings call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Apurv Agarwal, Joint Managing Director from Sirca Paints. Thank you, and over to you, Mr. Agarwal.
Thank you so much. Good evening, everyone, and thank you for joining us today. With me on the call are our Chairman cum Managing Director, Mr. Sanjay Agarwal, our CFO, Mrs. Shalu Arora, and Mr. Hira Kumar, our Company Secretary and Compliance Officer. We appreciate your continued interest in Sirca Paints. We have had another successful quarter marked by significant top-line growth. Our revenue from operations reached 105.5 crores, representing a 26.2% increase year-over-year and an even more impressive 34.1% growth quarter-over-quarter. This robust performance is fueled by our strategy of focusing on high-value acrylic products, which are gaining traction in the western and southern region of India beside our northern India stronghold. This top-line growth is mirrored in our total income, which stands at 106.34 crores for the quarter. However, as many of you are aware, the paints and coating industry is experiencing a period of challenging and exciting times, and we haven't been immune to some of the headwinds thrown by them. Let me address these challenges head-on. Firstly, we have seen heightened competition in the general polyurethane product segment, putting downward pressure on the pricing. This has been a factor in the year-over-year decline in our EBITDA, which sits at 18.96 crores. Secondly, the cost of raw material have fluctuated, impacting our profitability. This, coupled with muted demand in Q2 that let us increase dealer schemes, have put pressure on our margins. Our EBITDA margin for Q2FY25 is 17.97% compared to 20%, which is our guided range. However, I want to emphasize that we are taking decisive action to address these challenges. Effective October, we implemented a strategic commensurating price increase across our entire product portfolio. Besides this, we have escalated our raw material optimization program to gain more efficiency, thereby resulting in saving in costs, which are in turn impacting our EBITDA positively. These measures are already showing positive results. Our EBITDA has rebounded significantly quarter-over-quarter, demonstrating a 34.7% increase from Q1 of FY25. Similarly, our PAT and EPS have both seen healthy 30.1% growth quarter-over-quarter. We remain confident that these strategic actions will lead to improved margins in the coming quarters. While we navigate these short-term challenges, we are not losing the sight of the bigger picture. Sirca Paints is strategically positioned to capitalize on the immense growth opportunities in the paint and coating industry. The demand of high-quality, innovative products are only going to increase, and we are ready to meet that demand. Now, I would like to highlight some of our key strategic initiatives. Firstly, we are committed to further expanding our distribution network, which already have 2,476 nodes, excluding our OEM partners. We are continuously investing money in marketing and promotional activities to strengthen our brand visibility and connect with the customers. We are also continuously and actively looking for inorganic growth opportunities as a part of our strategy through acquisitions. A key part of our strategy is to grow our OEM business. We are proud to be preferred OEM vendor for renowned industry players. Our goal is to become a dominant force in the retail market, and we are well on our way to achieve that. We are also excited about our recent acquisition of brand Welcome from New Wembley Products LLP. This strategic move has strengthened our product portfolio and allowed us to reach a wider customer base. Our investment in technology is another area where we are making significant strides. We recently launched an enhanced version of our Sirca Parivar app designed to improve customer engagement and streamline our royalty program. With over 24,750 registered contractors and 17,600 average daily product scans, the app is providing and proving to be a valuable tool for building stronger relationships with our customers and influencers. In addition, we are focusing on expanding our product portfolio to cater to a wider range of customer needs. Our recent additions include high-end wall paints and coatings, reflecting our commitment to diversification and innovation. We are also expanding our footprint beyond India. Our advanced manufacturing facility in Sonipat is now also exporting products to Nepal, Bangladesh, and Sri Lanka. This is just the beginning of our global expansion plan. Before I open the floor for questions, I want to reiterate our confidence in the long-term prospects of Sirca Paints. Our commitment to delivering high-quality, innovative products, coupled with our strategic investments and proactive approach to address the challenges, position us for continuous growth and success. We believe in the power of partnership and collaboration. We value the trust you have placed in us as investors and partners. We are committed to delivering strong results and creating value for all our stakeholders, including Sirca Italy. Now, I would like to open the floor to your questions. Thank you.
Thank you very much, sir. We will now begin with the question and answer session. Anyone who wishes to ask questions may press star and one on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may please press star and one to ask questions. The first question is from the line of Manan Poladia from NKP Securities. Please go ahead.
Hello. Hi, sir. Am I audible?
Yes, please proceed.
Yes, sir, you are audible. Yeah.
Congratulations on a good set. Sir, my first question is with respect to the new acquisition that we've made, Wembley. I'm assuming a part of this 100 crore is from Wembley and some chunk must be from Oikos. If you could first call out the revenue contribution from these products separately for the current quarter. And secondly, my other question is on margins. You also mentioned in your PPT that we are facing additional competition and some of the newer players, the non-incumbents, have also entered the space, as we can see. If you could just comment on whether you think that the current margins are where it's going to be now from a long-term perspective, or this is a slight slowdown and then you're looking to go back up to 20 or 21% margins. If you could just call that out, that would be great.
Yeah, thank you. So see, when we talk about our revenue, so this quarter, the revenue contribution which was coming from the new acquisition Welcome was about 11 crores. So almost 96 crore was coming from our core PU business. Oikos is a recent launch, and it's moving more or less on the same monthly average of about 40 lakhs. So only 1.2 crore was the contribution from the Oikos, which was more or less the same. So compared to last year, if we compare only the polyurethane and the Oikos sales, from 83 we grew to almost 96. So almost about a 13 crore additional revenue was coming from our core business, and 11 crore was coming from the acquisition made under the brand Welcome. Coming back to the margins thing, see, Q2 was actually extraordinary for our industry due to this prolonged rainy season, and the demand was seen to be muted, especially in the month of August and September. So the steam outflow, from the entire sector actually was on the aggressive mode. So was Sirca. So our scheme costs for the month of August and September were actually on the aggressive mode. And on the other hand, there was some temporary pressure also in our key raw materials. So both the situations were actually impacting our margins, for about 2.5-3%. But as I told you all, and as I mentioned in my words earlier, that we have taken some corrective measures related to price increase, which happened across the sector and across the competition. So we are quite confident that in the second half, where we are expecting better demand, with this price increase and better raw material situation, we will be able to come back to our original set of margins.
Just a follow-up on that. So you had mentioned earlier that you were going to ramp up investments into marketing and branding expenditure. If you could just call out what percent are we currently spending as marketing and branding?
See, currently, again, we are more or less on the same percentage that we did last year, which averages between 4 to 5% of our revenue. Though we plan to, increase our marketing spend, talking more to the customers and the influencers, but seeing the Q2 scenario where, the market condition was tough and the demand was a little on the lower side, our marketing initiatives went very well, promoting the high-end acrylic products, especially in the south and the west region, where we are still on the entry mode. But on the other hand, in the northern part of India, where we wanted to go more aggressive speaking to customer, we were a little on the backside and, putting more pressures on the south and the west, where we interacted more directly with the influencers. So we did a lot of architect meets, contractor meets, dealer meets, spent a lot on the influencers along with the schemes. So more or less, we are on the same percentage, 4 to 5% of the total revenue is again going in the marketing cost, but majorly B2B.
Right, sir. Understood. I'll just get back in the queue. Thank you.
Thank you. The next question is from the line of Nikunj Parmar from Ilios Investment Advisors. Please go ahead.
Yeah. Am I audible?
Yes, sir. Please just.
Firstly, very, very congratulations to the company for basically showing such strong results despite the muted demand and all. So basically, my question was, while I was going through the quarterly reports, in the cash flow, the consolidated cash flow, there is a line item which mentions the financial assets, basically adjustment for financial assets, and it shows like 31 crore of entry for the last quarter, basically. And so basically, what is it actually?
Okay, so Shalu, would you like to answer this question related to the financial?
This is actually a combination of other non-current assets and other financial assets that are current, and other current assets that are under current assets head, and investments.
So
we
basically,
completed that investment. So in March 2024, we had investments of approximately 40 crores. Now we had an investment of around 6 crores because we have utilized these investments on acquisition of Welcome brand.
sorry. Okay. So, but why is it in like operating activities? Shouldn't they go through the CFI basically?
Sorry?
Like, why is it shown in basically the operating activity? Shouldn't they be flow through the CFI in the balance sheet?
No. It is under the investment side only. It is
So
under the investment side as per the Schedule 2 of Companies Act.
So basically, as I can see, it's in the operating CFO side. So that's my main basically concern. Like,
No. That's totally correct. If you still have any queries, you can get back to me on my email ID.
okay,
I'll give you detailed information.
okay, great, thank you.
Thank you. The next question is from the line of Kunal Tokas from Fair Value Capital. Please go ahead. Mr. Tokas, I have unmuted your line. Kindly proceed.
Hello, am I audible?
Yes.
Okay. So my first question was, what would your market share be in the coating side in Delhi NCR, and especially what would the market share of Asian Paints be now that it is becoming aggressive in this segment?
See, if we talk about Delhi NCR, we operate at a strong market share of about 28%. And, as we talked about Asian Paints, considering their vast distribution network and polyurethane coating becoming a mass product, if we talk about their primary sales, obviously they have a larger market share of about 42% in Delhi NCR itself, which has grown in the last couple of years. But as I told you, and as we have mentioned in our last year and previous calls, that Sirca operates very strongly on the secondary front, where the company is generating strongly the sales from the ground through contractors and architects. So practically, the company operates on the model where we are not dumping the material at the retail network, but trying to create the demand strongly. So if we talk about our strategy is still more on the secondary side compared to the competition, which is more of like primary and dumping more products at the dealer end. But yes, if we talk about straight away the market share in Delhi NCR, we are at 28% and Asian Paints would be about 40%.
And what would and has this grown very strongly recently, Asian Paints market share, or say in the last 4 to 5 years?
No, in last 6 years, they launched their similar kind of product range in year 2016, late 17. And immediately after the year, they are more or less at the same market share. As I mentioned you, the main reason is their vast distribution network and, their primary billing. So that's why.
Okay. So they launched it in 2017, and since then they have grown to 42%.
Yeah, they have been more or less at the same market share since beginning. So it's not that they have grown gradually or they are increasing their market share. Yeah.
Okay.
Yeah.
Okay, sir. And any updates on any acquisitions that you are scouting for in South India?
Yes, so still it's taking more time than normal at the non-binding stage. So hopefully, within this financial year, we should be out with our second, news regarding the second acquisition, which is planned to be a brand from South.
Okay. And we had been, you also mentioned it, that there was some pressure on the general PU side. is there also some pricing pressure on the acrylic PU side, and how has been the offtake of acrylic PU, the performance?
So the acrylic PU products have performed excellent, in the quarter two, and a lot of quality furniture manufacturers, including the high quality residential sites being done by architects, has used and moved to acrylic polyurethane products instead of polyurethane, which are in better quality and very low on VOC. So there, the competition is still very, at very initial level. So we are dominating the position and dominating the price with high margins. And in the coming years, also for next couple of years, we don't see very strong competition coming in, and the focus of the new entrants or the key players still remains to polyurethane, which is where the numbers are increasing, but it's becoming more at a primary and a commodity product. Though with the expertise of Sirca Italy, we are able to compete there very strongly with our world-class manufacturing facility, which is 80% automated. And due to the muted demand, or you can say demand less than what we expected in the quarter two, has aggregated and triggered this increased scheme outflows. But fortunately and positively for the whole sector, most of the companies have already taken the price correction, and the RM situation is back to normal. So we are seeing that even in the polyurethane, we will be able to recover those lost margins, and the second half can perform much better and contribute to the whole year EBITDA to come in our range.
Okay, sir. That was. I'll come back in the queue.
Thank you.
Thank you. The next question is from the line of Saumil Shah from Paras Investments. Please go ahead.
Hi, thanks for the opportunity. So last call, we had guided for a minimum of 40% growth for this financial year in terms of revenue, and with EBITDA margins of 22-23%. But it seems we are not close to that. So would you like to revise our guidance for this year, or still we can achieve this 40% growth?
Quarter two, including quarter one, which was because of the extended summers and labor problems, and quarter two because of the extended monsoons, and August and September, the demand from the real estate and the home furnishing side went really down, and it was quite a muted demand, and both the quarters have had led to a lesser percentage of growth in revenue than what we expected. Though compared to the industry, we moved a little better thanks to the new addition of the brand and thanks to the acrylic range of products, where we are still dominating the market with very less competition, which helped us to achieve the numbers which are much, quite or much better than the industry results. But going forward, the second half, in any case, with our ground research, are expected to be better in terms of the demand. The projects should open up, and we are keeping our fingers crossed that if the later chunk of the second half performs well, and with the better distribution network and acrylic products picking up, which are high value, we should be able, or we should be very close to achieve the numbers that we quoted in our last revenue calls and in last investor call. And so we are hoping and we are quite positive that we should reach to those numbers.
And the EBITDA margins of 20-23% for the whole year?
So currently, we have taken a price hike, and which has been done across the sector. Along with that, we have also a better condition related to the raw material. But considering our acquisition of Welcome, where the revenue, we have increased revenues at a gross margins which are a little less than our gross margins of Sirca products, we are expecting that the EBITDA should stand the whole year EBITDA should stand around or between 20-21%.
Okay. And so what is our EBITDA margin on Welcome brand?
EBITDA there is coming out to be about 15%.
Oh, okay. Okay. And last year, I think we had done a revenue of 50 crores for Welcome brand. And somewhere we were targeting close to 100 crore for this year. And whereas this quarter, we have done only 11 crores. So how much, I mean, what can we expect for this year for Welcome brand?
So yes, last financial year, they did a sale of about 48 crores. Considering a full year sale, for this year we are eyeing, and we are eyeing a revenue close to 60 crores. So as the market behaved quite mutedly for the mass product range, especially as seen in the results and as seen in the area of competition as well. Welcome also faced a little tough time related because of the extended monsoon. So the range of the product under the brand Welcome is quite complement, where the demand goes down during the monsoons, where the mass polish and hand polish product takes place. So that's why the Q2, where we were expecting anything about 14 to 15, went down by 30% according to our original expectation. But with the beginning of the second half of the year, the things are turning out to be positive, and by the year end, we plan that it should, at an year average, it should end about 60 crores.
60.
Yes.
Okay. And so out of the total revenue for this quarter, how much is in exports?
Currently, export is negligible. We are majorly exporting about 20 lakh a month to Nepal and a single customer in Sri Lanka. Though recently we have exported a single container also to Russia as on the trial basis, and we are waiting from Sirca Italy and the customer the full report, as Sirca Italy is quite cautious when it comes to the quality, so they want to be 100% sure with the long-term testing of the products in the other markets which moves out to India. So that process, according to the QC structure of Sirca Italy, is taking a little more time. But yes, going forward, we are expecting that that our share in the export should increase also rapidly in next 1 year horizon.
Yeah, because I think in last calls you were too bullish on export front, and 20 lakh a month is too less for you.
The 20 is only Nepal, and the same more or less 20 is happening in Sri Lanka, only one customer. Though the bigger chunk of export that's mentioned in the last call had to come from UAE and other nations where we are entering into, through Sirca Italy. But the first container, the sample consignments to Estonia and one full container to Russia happened a couple of months ago. But yes, the real numbers are yet to come, as I told you that Sirca would take a little more time evaluating the products going out from India to their distributors in Russia, Estonia and other South Asia Pacific regions. And once they are done with the long-term testing of the product, then the outflow should increase.
Okay. And so my final question, in terms of decorative segment, how much you can expect for this year in terms of revenue?
Decorative, we are not eyeing more than about a 36-37 crore revenue. So last year was about 25-26. This year 35-36. The main focus of the company remains on the wood coating products, the decorative range of product, and high margin range of products from oikos. Especially oikos are growing, but the rest of the economical decorative segment, which is the area which is getting very competitive, the company is using these products as the strategic catalyst and tool to enter, or to enter the newer territories in South, and to enter the newer dealer network in northern part of India and sell finally our wood coating products.
Okay, so what is the reason we are reducing our target for decorative segment? Because if I'm not wrong, last call you mentioned from 24 crores we are eyeing around 60 crores for this year in the decorative segment.
See, quarter as we have seen in the first half of the financial year, The decorative segment, especially after the arrival of the new players, the new entrants, have actually, the market scenario has changed, and in quarter two, especially the margins in the decorative segment have seen a massive downfall of about 30 to 40%, even in the products like OBD, where the realization is just 30 rupees a kg or a liter. So considering that the company is focusing more on the higher margin of products to push oil costs, and using the economical regions of decorative, which was 24 about 24 last year, and this year expecting to be 36, only where it requires to enter the market where you need range of wall paint to sell your wood coating products. But considering our whole year, we are expecting a decent jump from the acrylic and ranges of products, which is moving much better and much better in terms of number than what we expected at the initial year. So this high price war and reduced margins at the mass decorative level of the products are we are more keen towards using it more as tools.
Okay. Thanks, Apurva, for your detailed explanation. That's it from my side. All the best for your future quarters.
Thank you.
Thank you. Before we take the next question, a reminder to all the participants that you may please press star and one to ask questions. The next question is from the line of Bharat Gupta from Fair Value Capital. Please go ahead.
Hi, Apurva. I hope I'm audible. I have a couple of questions. So first, in terms of getting out the distribution license from the parent company for the UAE market, so I hope you mentioned in the previous calls and also in your remarks that it is taking a bit of amount of time. But any timelines which has been communicated to us, and what can be a estimated market size if I look about with respect to both Russia and with respect to UAE?
So yes, as I mentioned that in the beginning of the quarter two, the products moved out to a couple of locations in Russia, Estonia, and UAE, even Russia, a full container as a trial basis. So as to a certain range of countries, this was our first export. It took a little more time to get approvals as being a flammable product, which was a one-time job. And then as per Sirca Italy norms, they would not bypass the process of long-term testing, means the product being used at different areas, being tested for a longer term, seeing that if there is no product complaints or product issues related to cracking or drying in the longer term. Once the material is applied, even after 6 months, there is no problem. So their tax related to the long-term QC is at least 6 months, where the product is exposed to the nature, to where Russia the temperature is going very down, UAE going much high. So they would do a long-term testing of at least 6 months. So we are expecting by the year end, we should be able to get much more clarity from Sirca about their long-term testings of the products exported from the Indian facility to their old distributors in these South Asia Pacific countries. The revenue generation which can happen, especially from Russia and the Asia Pacific, is estimated to be about, conservatively about 20 million, which was actually the sale of Sirca there about 3-4 years ago, when the market was quite, aggressive buying from Europe, which lately had turned out to be difficult. But yes, 20 million euro is at least that, that can start from 2 to 3 nations that I'm talking about.
So for us, it will be somewhere close to $5 million with respect to Russia.
20 million euro is, I am talking about 3-4 countries, so UAE, Estonia, Russia, where Russia plays the most important role because of the, global situation. Sirca was able to sell through Belarus earlier, but now the situation is worse. So yes, 20 million euro is about $23 million.
Right. So that will be a target market size for us with respect to the
To start, yes, to start with.
Right. In regard to it, like, what kind of a CapEx are we planning? Like, I know the clarity is missing, but in terms of like, what kind of a CapEx would be required for reaching out to these kind of a revenue numbers?
See, currently our facility is working at about a 60% capacity utilization once the products which were earlier being imported, now being manufactured here, has ramped up, and by the end of year, we are expecting it to reach about 75%. So still in single shifts, we can use currently, immediately the facility to cater to the export needs also. But going forward, we are company once gets a full nod for the export would be setting up a facility in Gujarat, Dahej, with a capex of about 20 to 25 odd crores.
Correct.
Yeah.
So, secondly, coming on the domestic space, so NCR in particularly Delhi, which has been witnessing pollution issues with GRAP 4 being implemented. So there has been a ban on the construction activity. So in your like assessment, how do you read the second half for us, and what steps are we trying in order to diversify our reach?
So yes, unfortunately, the climatic conditions have forced the government to implement the GRAP 4, which has put a ban on the construction activities. So the Q3 obviously is planned to be impacted, and the company is strongly working on the new OEM clientele and the clients in West and South retail to cover up the loss of revenues which will happen from our main region, Delhi NCR. Though in the beginning of the quarter we expected the ban to be of a shorter duration, but unfortunately it's just picked up, and we are expecting another 15-20 days in the Q3 to be under the ban. But the same loss of revenue, the company is strongly trying to cover up from the newer segment of the OEMs, where the work will continue to happen, and from the enhanced South and West retail network. And especially we are anticipating a much better Q4, which will, we should cover up for the Q3. So the second half in total should come back to our expectations of the percentage of the revenue growth, and should also cover up for our margins.
Because I think with respect to 40% kind of a run rate, I think it will be a steep increase if I look at the H2 numbers. So we need to do more than 250 crores of revenue overall. And with respect to OEMs also, the margin profile, how it varies between the B2C side versus the OEM side?
See, the final margins that company gets is more or less the same from OEM and retail network. In the OEM, we have the final price to the customer, but through the retailer, we have prices after which we have a lot of aggressive contractor and architects and dealer schemes. So the final price or the final realization to the company contributes same margin made from OEM or the retail dealer.
All right. And you mentioned that there has been a good amount of hikes which have been taken in the month of October. So can you just quantify a bit, and also like what kind of a pricing hike has been taken by the industry overall?
So if we talk about the wood coating, the wood coating side, not the decorative side, the average increase in the market has been about 5 to 7%. Especially if we talk about the giant companies. Our price increase and average increase has been about 3.5%.
Right. And that is across OEM side as well?
So there has been immunity to certain key customers where we have a year deal of targets, but besides that, it has been it has been done for our all customer base.
Right. Also in regard to the working capital, so I think inventory has jumped up a bit during the quarter. I know it's been a muted one, but overall, how do you look at the working capital scenario? particularly since we are manufacturing it in-house. So where do you see, because previously with respect to the value added and with respect to PU, it was getting out imported and there was a lot of inventory which was booked. So currently, how the scenario has changed for us?
So, the whole correction will take another 4 months. In another 4 months, we will be at much better, at a much better place related to this stock position, inventory position. And, the local production started in late April in full swing after the final nod of Sirca Italy related to qualities. And during that time, the local production also began, and we started to liquidate the rest of the inventories that we had from Italy. So slowly and steadily, the step happened. In the beginning of Q2, our revenue projections were much higher than what happened, especially when the demand got down in August and September. But our planning related to RM and FG were a little on the higher side. So that has actually, resulted in increased inventories, which shows on the paper currently. But in next 4 months, we will be in a much better position because, again, the top 10 products will be here and the whole imported stock will be out, where we will be working at a 30 days inventory. And yes, it should get better. And currently, the import side, we expected the situation to get much better, but again, due to the problem at sea level, at Red Sea, because of the Iran-Israel thing, again, the time of getting the high-value products, which we are still importing from Italy, has again increased from 2 to 3 months. So another increase of 30 days. So the import products have to be kept again a little more, considering this disturbance, which are not ending. So, but besides this, considering the increased import time, but a reduction in the in products that being manufactured here, we should be at a much better position in next 4 months. So 4 months it will take to show a complete effect.
Right. And you mentioned like overall the sales for the wood panel has remained at near about 90 odd crores. So just a bifurcation of it, how much would have come in from the acrylic and the water soluble PU side, and how much would have been coming from the commodity side?
So more or less 95 crore was our core wood coating sales, out of which, 60% was contributed again by the primary polyurethane products, the clear and the white, where we have seen mass competition among the base coats, especially the base coat, but the margin side in the colors, pigmented products which are used on the wardrobe and the kitchen saw decent margin also, and also the sales number was quite high, and the rest 40% were the acrylic and waterborne, which was about 25% contribution last year. If we talk about in H1, this year was about 40%.
And
in terms of value.
Primary one, so with the entry of Birla also coming in focus, Asian Paints getting more aggressive, so have we seen any kind of a erosion in our market share in this particular domain?
See, in this particular domain, we have not seen, conversion of our brand happening to the new entrants or the AP, but currently the focus of and the major competition remains at the decorative side, whereas our focus and our main contribution is wood coating side. So fortunately, from a year or 2 years now, we see more competition getting more aggressive at the decorative level, where the smaller players are facing more heat. But when it comes to a wood coating product, which is a specialized product, where along with PU you have acrylic, waterborne, and a huge range of products, still we are, much more confident and much more optimistic and positive that we should be able to secure our market share and increase with the better market conditions.
All right. Apurva, just a last question from my side. So when we talk about the inorganic acquisition, so will it remain towards the wood coating side, or it can be a different segment, though in the paint industry, but it will be a different segment which we are targeting?
So no, it will be in the coating side. Currently, Sirca is focusing on the coatings which is related to wood. Now, along with the wood, in the furniture industry, kitchen industry, wardrobe industry, metal is also becoming an integral part of the furniture, where the use of metal, which was confined to only the legs of the chair, now is increasing in the other furniture products and wardrobe and kitchen products also. So we are possibly eyeing a acquisition where where the product expertise is towards the metal side.
All right. And any kind of you can say any kind of a budgeting which we have done with respect to the acquisition, like how much, what kind of capex or money flow will be spending over there?
See, we are for sure eyeing some price and price effective acquisitions where we get a decent ROI. But yeah, we are capping our acquisition in the range of about 100 crores, not more than that.
That's it from my side. Thanks, Apurva, for answering all the questions.
Thank you.
Thank you, sir. We'll take the next question from the line of VP Rajesh from Banyan Capital Advisors. Please go ahead.
Hi, thanks for the opportunity. Just two questions. One was regarding the competitive landscape. You mentioned Asian Paints. Can you also talk about the other players who are perhaps larger than we are, and what are their market shares and what kind of competitive intensity you're facing, given what's going on in the decorative side?
So, other players currently, our immediate competitors stand Ika Pidilite, which will be 20% more in terms of revenue. Besides this, other key players, the wood coating business, especially the high quality wood coating business, is still less than us. So their interest and their focus in this area is increasing, but still we are, considered to be the third largest player when it comes to the pure high quality wood coatings, which is the 2:1 PU. The competitive space is is getting more. The total paint space is getting competitive day by day, but the competition is seen much more aggressive in the wall side, decorative side. Though, fortunately for us, the current focus is more wall with the new entrant. But at the end of the day, it will happen at the polyurethane coating side also. But fortunately for us, with the support of our parent company, Sirca, at least the company has changed gears and increased our activity and promotion of acrylic ranges of products, where the average realization is double than PU. So with the half quantity we do a same revenue of polyurethane, which is gaining traction in the market, in the high quality market. Besides this, in the PU side, with the expertise of Sirca, using the historical formulations, being present in the wood coating and the polyurethane area since 1973, we are using their expertise to manage quite effectively our COGS, considering so that we can cater to the pricing war if it still has to happen. So we consider ourselves quite competitive to that space, also maintaining our gross margins with our new Indian facility. So when it comes to wood coating, we are 100% sure that we will be able to cater to the increasing competition, which is still more towards the decorative side, where we contribute only a 3% of our total revenue. But on the wood coating side, we still believe we have a stronger opportunity to grow, where we will be able to save our market share and also grow much better when the market conditions improve.
Understood. Thank you. And my other question was, why would the parent company not directly export to Estonia or Middle East, given the logistics costs involved? So it's like, I would think that the cost will be higher from sending products from India to Estonia, for example.
See, even after considering the logistics cost to Estonia, the cost of production and the final cost of the product is seeing a big time difference. a lot of key raw material suppliers like Covestro, Sapichi, BYK are now setting up the facilities and making India as a hub for Asia Pacific, where the cost of goods produced in India are seeing a very strong downside, and Estonia is moving towards exports from Turkey or maybe, other countries near UAE. So considering the total fact, even after a higher cost of freight from India to Estonia compared to Italy to Estonia, we are finally coming out to be much more competitive.
Got it. Thank you and all the best.
Thank you. The next question is from the line of Dishant Jain from Quasar Capital. Please go ahead.
Yeah, thanks for the opportunity. I just wanted to get a clarification on the CapEx amount. So, sir, we have spent around 22 crores in the first half of this financial year, which is more than the last year whole combined. So, can you just help us in understanding where we have spent, either on the new plant or some new product? Can you just help us?
Sorry. I skipped a couple of words. So can you repeat the question? You need the clarity on what side?
So what type, are we spending on, are we doing the CapEx for the new products or for the new plant? Because we have spent around 22 crores in this financial year, 6 months. It is more than what we have spent in the last full year.
No, that is spent for the acquisition of the brand Welcome.
Okay.
Yes, we have not done any other new capex as of now. Once after the positive notes from Sirca, we will be doing a new capex of about 20 odd crores in the Gujarat to set up a new facility to produce another 16,000 tons a year, which can generate a revenue of economic polyurethane products of about 400 crores. But besides this, we have not done any capex except the acquisition of the brand Welcome that we did at a very attractive valuation.
Okay, thanks for the clarification.
Thank you.
Thank you. The next question is from the line of Manan Poladia from MKP Securities. Please go ahead.
Hello. Am I audible, sir?
Yes, sir. Please proceed.
Yeah. So I have just one question. If within the 96 crores you could call out what chunk of that is acrylic PU and what chunk of that is regular economic PU, I think that would be great. That's all I want to ask.
See, out of 96, the contribution from the regular polyurethane products, clear and pigmented, especially where the pigmented side saw a real jump, was about 60%, and the 40% was coming from the acrylic range of products. Unfortunately, considering that acrylic is coming from Italy and the timeline has increased, we also saw some products getting out of stock. But yes, the current contribution percentage was about 60-40.
Okay. And could you call out the margin differential between the two of these?
Gross margins of acrylic products, finally the net margins that company get is about 10% to 12% more than polyurethane, though in the quarter 2 the polyurethane faced much better scheme. So acrylic was running at the prices level, that polyurethane was running at a discount of about additional 30-40 rupees per liter. But if we talk about in the current scenario, yes, there is a better gross margin of about 10 to 12% in the acrylic product.
Right, understood, sir. Thank you.
Thank you. The next question is from the line of Somil Shah from Paras Investments. Please go ahead.
Hi, thanks for allowing me a follow-up. Sir, to one of the previous participants, I think you mentioned 20 million euros is what we can do in exports in next 2-3 years. I'm sorry, I didn't understand.
To start with, where about 20 million euro sales is what we see, at the beginning level.
And in what, in next 2-3 years?
Yeah, if we get the nod of Sirca in less than couple of years.
Okay, because that comes to around 160 crores. So that's a significant jump in exports.
Sirca Italy has, alone for them, Russia was a market of about 9 million, UAE was a market of 6 million, another 3 million was coming from Saudi and non-GCC states like Qatar, 3-4 million was coming from Estonia. So altogether 5-6 states were contributing about 32 million to begin with, where Sirca is not able to meet the customer demands of pricing and logistics because of the global unrest. 20 million is what we see immediate to happen, subject to approval of the products that are moved out from here with in the long-term testing.
But then do we have the capacity right now to have this much of sales?
As I mentioned that our current capacity of 16,000 tons a year is running at about 50-55%, which is expected to be to reach that 70-75% for Indian demand usage, by the end of the year in single shift. The plant still can run in 1.5 shifts, not more than that. And to begin with, till the new facility is completely set up, it will take about 8 to 10 months from the date we start putting up the project. The current facility should be able to meet the demand of the export for at least 10 months till the new facility is on its feet.
Okay. And so almost 2 months for this quarter is already passed. And as you said, we had around 15 days of loss of revenue due to ban in North. So do you see Q3 similar to Q2, or do we see a degrowth in Q3?
See, historically, always Q3 has been a little down compared to Q2, and Q4 has been more or less the same or better than Q2. So, considering the fact we have taken certain measures where we will be able to take care of the revenue loss because of the ban, which is set to happen in the next few days from the other clientele being added, especially at the OEM level and the South level. But overall, if we talk about considering the historical data also and how the market is, the Q3 revenues are little lower than Q2 always.
Okay. And so my final question, you just mentioned we have a capex of 20 to 25 crore for the new capacity, and in that the peak revenue we can go up to what, 400 crore in that capacity?
Yes. With 20 to 25 crore capex, we will be generating a similar kind of the capacities, about 16,000 tons a year, and with the focus to sell only the economical ranges of polyurethane products, we should be able to generate a revenue of about 380 to 400 crores.
Okay. That's it from my side. Thank you.
Thank you. The next question is from the line of Kunal Tokas from Fair Value Capital. Please go ahead. Mr. Tokas, please proceed with your question.
Sorry. Am I audible?
Yes.
Okay. I just wanted to confirm two things. First is, what sort of products will you be exporting? I assume it is not acrylic PU, but the normal economical PU?
Yes, it will be the economical PU, which is becoming a mass commodity product.
And so it is for this product that you will be setting up the Gujarat facility?
Yes.
And the last thing I wanted to confirm was that Sirca India has been chosen to export because no other vendors in nearby regions would meet that demand, and because after all cost considerations, he was still more competitive.
Yes, because considering the the cost of production we have in India, considering the newer chemical players from Germany and Italy are choosing India as a hub for their manufacturing facility, has initiated the spark in whole Europe of making India as a hub because of the different advantages related to final reduction in the cost of production and compete with countries like Turkey and UAE, which are becoming, or China, which are becoming very aggressive in the manufacturing. So that is why they have chosen India for their future growth.
Okay. Thank you very much and have a good day.
Thank you.
Thank you. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference over to Mr. Apurv Agarwal for closing comments. Over to you, sir.
Thank you. Once again, I would like to thank you, each and every one of you, for joining this call today. And again, I would like to mention that we value the trust you have placed in us as investors and partners. And I would like to comment again that we are committed to deliver strong results going forward and create high value for all our stakeholders. So thank you.
Thank you, members of the management. On behalf of Sirca Paints, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.